Hi, Carl. Great to see you again, and so happy to be here for another session of the ESG Imperative. So today we're going to talk about why it's important for private equity firms.
Martha, it's great to see you again, and this is so topical at the moment. And ESG is a key issue for all parts of the economy, but particularly for the private equity firms who invest in small and medium-sized companies.
Absolutely agree. And, I think you've mentioned before some of the information that their partners are demanding. Can you talk a little bit about that?
Sure. Many of the institutional private investors in private equity firms are beginning to ask, or have been for some time, been asking for ESG data of the portfolio companies and the metrics and targets that they're achieving in terms of carbon footprint, greenhouse gas emissions, water pollution, how they're treating their employees, labor practices, health and safety, impacts on communities, etc. And let's not forget diversity, which has come to the fore since the COVID-19 pandemic breakout last year.
Absolutely agree. And I think one of the areas that it's important for private equity to be focused on and investing in is their data to be able to provide those metrics. They've always been very good at providing financial data to their partners and their other stakeholders and their investors. But this kind of data on the ESG metrics is really going to be increasingly important going forward, I think.
I agree. And the key issue is that recent studies have shown that companies that manage their business in accordance with specific ESG criteria metrics are shown to have a greater market value than those that don't. And if private equity firms take an ESG lens on their acquisition targets, they should be able to identify cost reductions, new markets, new products, the possibility of growing market share, which the potential or the vendor is unable to identify.
I agree. And, I think one of the other areas of opportunity, especially as you mentioned earlier, for private equity firms that are kind of more in the middle market area, is to look across their portfolios and see where there might be opportunities between different portfolio companies, but also to set up some forums for the CEOs and founders and the management of these portfolio companies to share best practices, especially, again, in some of these companies that may not be as large. Might not have the kind of infrastructure that larger companies may already have in place for ESG, but there are a lot of opportunities in that area. And I think even more broadly, private equity has always been an accelerant for change in the economy and in companies. And I really do think there's a great opportunity for them to do the same in ESG and to really accelerate how ESG is embedded into companies and how we are treating it in the broader economy. They don't have the same kind of quarterly financial pressure. Their investing horizons, I think, match well with what we're looking at in terms of a lot of ESG and climate horizons.
Agreed. And as you said, the private equity firms have much longer time horizons. And if they've been able to collect and report the performance of their portfolio companies against specific ESG metrics and targets over time, that should enhance the disposal value of those companies with their putting that data into their data rooms to show their potential acquirers in the future.
Agreed. I think this really plays to the strengths of private equity and to what they have historically done well. So I would say that, one key takeaway here is that private equity should embrace the opportunity to be an accelerant of positive change with respect to ESG and to really look at it in the different phases of their operations, as you mentioned, from asset acquisition to managing across their portfolio and to asset disposal. And second takeaway being, that look across the portfolio and really trying to marshal the best practices and employ them in different companies.
Yeah, as you say, the metrics and data on those metrics are key. And as we've said before, if you can measure it, you can manage it and you can report it. And if you can report it, then your investors are in a position to receive the information that they want. And so the key there is to work together with the investors as to understand what are the key metrics that they're looking for to understand the ESG impact of the portfolio companies, and then to have that data independently verified, so that when they come to dispose of those assets, they then have independent data and the targets and the metrics, which should enhance the disposal value of those companies.
Absolutely. I think there's a great opportunity here. Wonderful to see you again, Carel. Look forward to the next session on the ESG Imperative.
Martha, it's, as always, it's great to talk to you on this topic, which is becoming really important in the economies of the world today.
Thank you.
Bye.
Bye.